UBS was saying recently that they need to spend more than $2 billion by the time it starts that Model 3 production, that they also believe they're going to have to raise cash here, just based on the fact that it seems we've dropped by $1 billion in quarter to quarter here. How much more concerned are you, again, by that cash burn and the need to perhaps raise cash this year? Kevin first.
Yeah, and even though we are talking about billions of dollars, those single-digit numbers are pretty easy to calculate. So when you look at the burn for the quarter plus the investment that needs to come to get to Model 3 to where it needs to be in terms of production run, you can very easily figure out how much cash or how long they have to go. So essentially, some sort of capital raise is imminent.
Yeah, and Edward, come in on this too, because you've been saying, look, they're not getting it, that they need to have crossover, they need to utilize the resources of one product for a second. What do you think about the cash burn here? Yeah.
Yeah, well, like I was saying, I mean, the sort of massive increase in improvement in production capabilities that was supposed to come with the Model 3 is actually coming with the Model Y. And as a result of that, the Model Y will be an entirely new platform. So as you say, Tesla is not getting economies of scale by sharing the Model 3 platform with sort of what was supposed to be the crossover version of it, which is the Model Y. So that, obviously, is going to mean they're going to burn even more cash, because it's another good $1 billion by sort of industry rule of thumb to develop a new platform. And who knows what this new production system that's supposed to be very highly automated will cost both to develop and to deploy.
The proof is going to be in the pudding, and that's the bottom line here, Kevin. Just final point here. Is it up to Elon Musk here just to keep reiterating that, we're ambitious, but we're going to do this, and investors, for now at least, keep buying the story?
And I think the biggest misconception, at least from my perspective, is that Tesla, whether it's with product or technology or production capabilities, can do things that other automakers cannot. And to Ed's point, other automakers have other platforms that can fund new development, where Tesla really has to go back to the equity markets or the debt markets to do so. So I think the fact that it's losing money and burning cash is the competitive advantage right now. Other automakers don't want to do that.